The Indian markets witnessed heavy selling pressure in the week gone by, and the news surrounding the Yemen bombing of Saudi Arabia, I think, spiraled crude prices up, and Nifty saw a major crack along with the expiry. Having said that, probably I think very few triggers for the markets to run along in a rally from a short to medium term perspective. Having said that, probably I think corporate earnings expected to remain weak for this quarter and the next. RBI not expected to come out with any rate cuts in its April 7th policy, and very few triggers probably even on the global scale. So I think Nifty might probably consolidate in a range between 8,400 to 9,000 odd levels, and any spike that we probably see in terms of expectations of earnings probably exceeding market analysts' expectations, I think you might probably see stocks within specific sectors actually do well. So I think beginning with IT in the first half of April, the managements have very clearly indicated that the cross-currency headwinds will eat into and erode into their EBIT margins. But clearly from a long-term perspective, I think if there is any significant decline on IT stocks like an Infosys, Wipro, TCS, I think they remain very, very strong buys. Clearly, I think pharma is one sector where we assume that the earnings stability and the earnings growth will be maintained. And capital goods stroke infrastructure stroke construction is one sector which will probably a laggard. And again, I think the kind of tepid order flows that we're witnessing in this sector, weaker execution, working capital constraints still plaguing the sector overall, I think that will have some amount of bearing. Banks, I think, again, between the private and the public side, one really needs to be a little bit more cautious. So private is where we'll be still overweight on, though we like a select few public sector banks like State Bank, like Bank of Baroda, like Bank of India, Canara Bank, to name a few. So again, I think the markets will gyrate within this range that we are probably talking about. But I think earnings will be one key factor for the markets. And if earnings disappoint, even after analysts assuming big numbers coming in, I think the markets might actually crack down further from the current level. So I think the kind of rally that we are probably witnessing might come in as a breather. But long-term investors probably should understand that there will be further declines onto the market, and a staggered way of approaching the markets over the next 2 to 3 months, having a very stock-specific approach is mandated. Clearly, from a trading perspective, I think it's very choppy, and again, I think sharp and volatile moves into the market. So again, even from a trader perspective, I think you should really be stock-specific and probably keep your stop losses very, very tight and maintain that at all points of time. So our take is probably, I think the markets will look forward to how the corporate earnings shape up. So clearly the market's expected to stay in a range, but stock-specific action will continue. So have a great week ahead. Happy investing.